The latest manufacturing data out of China, as we'd heard, has beaten expectations and defied predictions of a moderate slowdown. The official October reading of the Purchasing Managers' Index, or PMI, rose to a six-month high of 54.7. A separate PMI reading from HSBC showed similar strength. The increase came despite the week-long national holidays in October, when production usually slows down. It's the 20th straight month that PMI has stood above 50, a level that separates growth from contraction. Attention will now be on China's inflation numbers, which are due next week. Manufacturing output in India also increased in October. A private measure of the PMI by HSBC rose to 57.2 after a decline in September. A score above 50 signals expansion. Increases in new orders and exports helped to boost the PMI this month, but the data also reflected on growing pressures on production capacity and price inflation. And those positive manufacturing numbers out of China also helped to lift commodity markets. To find out more about this, I'm joined by Jonathan Barratt from Commodity Broking Services. Jonathan Barratt, welcome to Business Today.
Good morning, Whitney.
So that data out of China, it boosted commodities, and copper in particular was in focus.
Yeah, Whitney, I think it was a bit of a surprise. I think the market was certainly looking for a little bit of cooling in the PMI, given that we saw an increase in interest rates only last couple of weeks. But yes, it came out a little bit better than expected, and we did see a good lift in the price of copper, purely, I guess, on the back of the expected demand.
Was it a surprise that copper was the favoured?
Yeah, I think so. I think when you look at it, copper's been in a range at the top end for some time. We saw quite a large sell-off last week in the metal, and last night we saw quite a large rebound. When we look at the price, we need to see it break through that 390. But remember, copper has a certain concern over supply-demand. It's certainly in supply where it's quite constrictive at the moment. So any news like that in the PMI certainly would have an adverse effect on the price.
But would you say, since it had such a sort of fallback last week, that it's just opportunists jumping back into the market?
Look, I think this is one of the big questions, because China is meant to be slowing down its economy. And all signs from the central bank are that, in fact, it is actually happening. They're trying to control and cool inflation. So a number like this is a little bit of a rare event. However, the market's certainly treating it as onwards and upwards type of mentality.
All right. Now, we also saw the price of oil jump off the back of these numbers. It hit a two-week high.
Yeah, no, oil certainly did. I think that oil has to have a little bit of catch-up given the weaker dollar. But certainly the demand, the expected demand, I guess, that people are saying, particularly out of China, is actually helping prices. Now, oil has been in quite a range for some time, and we are just trading to the top end of that band. And I think it'll be very key to see the DOE data coming out this week as to whether or not these highs will actually be sustained. Because remember, we are awash with oils, and inventories are on major highs.
So what sort of data are you looking at there? What will indicate that this is actually going to continue? Okay,
with the oil market, we've seen quite a lot of inventory builds, particularly in the States, and they're close to that 20-year high. So if we continue to see those builds occur, then we can assume that demand is not as strong as what we expect. So what we can see is that this data we've seen out of China might actually just represent more of a blip as to a trend, and therefore prices at these levels for crude won't go on from here. In fact, they'll probably continue to consolidate and probably come lower.
Do you mean this data out of China a blip for its economy?
I think it's more of a blip in terms of the size of the increase, given that it's against what the central bank is actually trying to achieve. So on the back of that, you'd expect to see some more measures in terms of cooling the inflation, because I think China does have a concern on that inflationary aspect, because it's certainly creeping in, not just into your primary imports or the major economy, but into your foodstuffs, which was a concern they had 3 years ago, and that's starting to rear its head again.
Now, Jonathan Barratt, there are also analysts that are pushing for China to buy more gold and oil to offset this weekness in the greenback. Do you think that they will do this and that it is a good idea?
Yeah, what they will do is they'll continue on the path on the gold side, because they've just got to hedge their book, so to speak, hedge their reserves. So they'll actually continue to do that, particularly on the gold side. But that won't be in an on-market operation. It'll be off-market. And with the crude oil, it's going to be quite interesting to see what they do with their reserves, because we are coming into winter when things start to cool down. But in terms of reserve hedge, yes.
All right. Now, Jonathan Barratt, the other the other issue I want to talk about is that markets are nervously waiting on the next move from the Federal Reserve in terms of QE2. What do you think they will do?
Whitney, we're all waiting for that. I think that's something we've been waiting on.
And the Melbourne Cup.
And the Melbourne Cup, yeah. So it's actually been quite a tough one with the QE2, because the market's really factored in a very large number. And we're starting to hear that perhaps it's not going to be as large as what's expected.
So what will happen then if we don't get the number that's expected?
Look, you'll probably see the market move to US dollars quite aggressively.
And how will that impact? I know you're not currencies, but how will that impact on the Aussie then?
I think that'll probably suggest that we'll probably see a bit of a top in play for the Aussie. If we get no movement in interest rates today, and we get QE2, which is less than expected, then we could probably see a top in the Aussie.
And what about commodities? What effect will this have on commodities?
I think for the primary inputs, I think it's going to have more of an effect where we'll probably see it'll be more US dollar related. And if it's US dollar related, then US dollar firms, by default, those commodities, particularly the primary inputs, will come under pressure. And
what sort of upside are you telling investors to look for?
I generally think that when I look at the upside, particularly for your primary inputs, it's a little bit hard, given that we're still seeing a slowdown in China. But we see one area of growth, which is actually the natural gas market. So we're actually looking at the natural gas market seriously as more of a medium to long-term investment.
All right, Jonathan Barratt, we're nearly out of time, but one very important question, your tip for the Melbourne Cup.
It's going to be a tough one, but I'll go for shocking.
All right. All right, we'll leave it there. Thanks, Jonathan Barratt.
Okay, thanks, Whitney.